Hi everyone, today let's talk about the weakening US consumer. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the US consumer is starting to show weakness, and let's take a look at what they're talking about. So Atlanta Fed GDP offers a real-time glimpse of the US economy, and that has been trending down for a while here. You can see Atlanta Fed GDP estimate continues to trend lower. We talked about this as well when that data came out. Atlanta Fed is projecting just a 1.8% GDP, which is far lower than that 4% that was originally forecast, which you can see here around that 4% area. Blue chip consensus is still very close to that 2%, but the Atlanta Fed is now projecting below the median and almost below the bottom 10 forecasters here. So that's very concerning. Retail sales have been weak. Housing starts have been weakening. Industrial production has been okay, but they're saying it's been revised downward. So definitely seeing some cracks there. We did finally start to see a little bit of weakening in the jobs market, but not a whole lot. That Friday data was still quite strong, even with the unemployment rate stepping up to 4. So it's a little bit mixed on the jobs data, but it is weakening a little bit, and there are some indicators of that moving lower. But if that jobs data continues to weaken and those other indicators, plus we start to see revisions down on earnings, as well as a consumer credit crunch they're mentioning here, if all of those things come together at the same time, we could be in for a very weak market, as well as a very weak economy as a whole. And then you start to ignite fears of a potential recession, which could lead to a sharp sell-off, especially with the high valuations that we're seeing right now in markets. Moving over to fear and greed, we finished at a 45. The previous close was a 48. You can see we trended down pretty much throughout the week despite markets actually hanging in there and actually making higher highs and then some sideways choppy action. The reason that it's hanging down so low, even with high prices, is strength. It's definitely dwindling. Breadth, definitely dwindling. So we're seeing the top leaders in markets hang very close to their highs, if not making new all-time highs, which is keeping volatility low. But you can see fear in bonds and then junk bonds hanging in neutral. But really the big thing here, in my opinion, is that breadth has really not widened, and it's really just the top market leaders going higher. Moving over to the AAII survey, you can see we basically didn't change here. The bears ticked up a little bit. The neutral group did step down about 5%, and all of those moved into the bear category. But bulls were completely flat here at 39. Again, not a very big change. But if you're looking at this from a trend, you can see the bulls have been consistently stepping up just a little bit more. Neutral's getting squeezed. The bulls are still hanging in there, generally flat. But I would guess that this is going to start to swing towards the bearish side a little bit more. And as that sentiment starts to swing, that's when we should be concerned. Moving over to seasonality, you can see we are supposed to be in this bullish period, but now as we push into next week, the 10th is supposed to be the top of markets, and then we decline into the end of next week. So we'll see if that comes to fruition. So far, the rally has been decent, sideways choppy action, and then a downward move, like I said, is what we should be looking for. And then from that level, basically through the end of the month is where we're going to be. Maybe a little bit of a rally on that last day of the month to finish positive. So we'll see how it plays out. Right now, we are in this upswing, looking for a little bit of a down move before the end of the month. Moving over to the calendar here, you can see CPI, FOMC, Treasury budget, all of that is on Wednesday. That's going to be the big one for the week. Monday, slightly bullish like we talked about. Tuesday, Wednesday, bearish. I think the FOMC is probably going to trigger that down move to some degree. And then you can see a little bit of bullishness actually to close out the week, which is a little bit different from what we saw on the previous chart. So see how that plays out. And then don't forget the week after is triple witching. So you have options expiration on the 21st. Moving over to earnings, there are still a few earnings left. Oracle, $346 billion company. Got Broadcom, that's been a bellwether for markets, $650 billion company. And then Adobe here at $200 billion. So a couple of heavy hitters left for this earnings season. Moving over to the economic calendar, you can see European Parliament here for Sunday. 3-year note auction on Monday. Those have been more interesting. I would like to see that go down, but based on the jobs data, I don't imagine that it's going to. And then looking at Tuesday, 10-year note auction. Wednesday is the heavy one, obviously. We got CPI, core and headline. The forecast for the core is a step down here for the year-over-year numbers. That's what we would like to see. Year-over-year headline number is flat, and then month-over-month headline number is a slight step down. And then on the same day here, we have the FOMC interest rate decision and the conference at 14:30. So that's going to be interesting, obviously. I think that could be a turning point for markets. could be interesting. Markets have been hesitating at all-time highs. And then here for Thursday, 30-year note bond auction, PPI, initial jobless claims, that has been stepping up higher. Expectations there is a slight step down to 227. And then to close out the week, you just have Michigan inflation data, nothing major for the Friday session. Moving over to Max Pain, we have a million options in the market already. I wonder if that's because it's an FOMC week. Max Pain's at 528, stock price 533, so a little bit lower. Lots of calls at that 535 level, so not giving you a ton of upside potential. First put wall here at 528, which is a max pain, so that would indicate about a 1% down move for this week. Put call ratio is super high at 3.5, which is concerning. Usually that means markets are not going to be able to fall. If the put call ratio is too high, there's just too many options in here, meaning that people are willing to buy up the market at those levels. So overall, 1% potential down move in my opinion. Moving over to the charts, starting off with the SPX, you can see we did get another bullish week, 1.32%. Did throw a pretty big wick down, so it's a wide-ranging candle. Momentum basically zero. RSI critical level here, so we're right at the SMA. If it breaks down here going into next week, that could be very, very bearish. Or if it breaks higher, we could be pushing back up to these next levels, which could bring price to that next resistance up around 5,400, 5,500, right in that area. Again, either of those pretty possible in my opinion. Of course, everything looks a little bullish, so the upwards price target makes more sense. If we broke down from here, you would expect to move to that 9 EMA, which is closer to that 5,200 area. In terms of levels here on the daily chart, you can see that big wick rejection on the Friday, which was a little bit concerning. We talked about that in the Friday video. Structurally, it's still bullish for sure, and this is an all-time high. We did see that on that wick high. Momentum still technically bullish, support at 531.47. But remember, we could be having about a 1% down move. That would bring you back into this consolidation closer to that 527.35 area. Max pain was 528, so in that zone would make sense for a finish for the week. Doesn't mean that we can't go higher in the midterm, hit that upper trend line around that 5,400, touch that level, pull back into that mid-range. Would be a pretty wide-ranging week if we did see that, but it's absolutely possible, especially with all the volume and momentum that we see on CPI and FOMC weeks. Moving over to the Tasty charts here, you can see we're still headed towards that upper ATR band, which is close to that 547.70 area, so it's a little bit higher of a price target on the Tasty charts looking at that upper ATR. The 5,400 was from the SPX. That would be just a little bit ahead of that level. In terms of indicators, not a ton of volume, momentum kind of swinging to bullish here, but it's still showing mixed signals. It's in bearish conditions. We can see it can stay here for a while, but usually that accompanies downward price action. Right now, that's not what we're seeing, so not giving us a ton of information there. And then looking to this daily chart, this is where it becomes quite a bit more interesting. So upper ATR, 541, right in line with that previous price target that we talked about on the SPX. And momentum here, already bearish. Usually, as price goes higher with that bearish momentum on the volume-weighted MACD, eventually it does roll down. You can see it here. Bearish momentum, bullish price action. We were still consolidating, momentum starting to gain steam to that bearish direction, and then it eventually did break down to that lower ATR band. If it were to do that, that would be down around 514, so I do think eventually that's going to happen. Could push a little bit higher over the next week. FOMC, CPI, some of those things are going to push this lower in my opinion eventually. Question is always timing, and where will we eventually find that support? Moving over to the NASDAQ here on the weekly chart. Again, very bullish week here, which is a little bit unfortunate for me. I didn't trade it very well, so it's kind of hard to look at. But here we are, again, still seeing this declining RSI. Continues to be interesting as price continues to go higher. Price target right now, right around that 19,700. So we broke this trend line here, heading to the next one, in my opinion. So everything still looks bullish there. Momentum continues to swing to bullish, but it is worth paying attention to that declining RSI as price goes higher. The breadth is waning. We're definitely being led by those top stocks. And going down here to the daily chart on the QQQ, you can see we're right at this trend line here, holding that support at 462.96. That is an important level. The Friday price action looked pretty terrible. Definitely check out the Friday video if you want to see that. But this level, if it breaks down, the 9 EMA is sitting there at 457.30. Momentum, pretty weak. RSI, again, technically bullish, but it is trending down. The SMA is quite flat there, so pretty interesting there. But critical trend line needs to hold, and if it does, then you're getting close to that 472 area as a price target here on the daily chart. So again, price discovery, all-time highs, typically a little bit bullish, but that price action on Friday was a little bit concerning. Moving over to the Tasty charts, you can see that same thesis here. We're at all-time highs on the weekly chart. That upper ATR is at 481.25, so that would give you about another $20 of upside potential. Momentum, you could argue it's starting to swing to bullish. It really hasn't accelerated at all. It's been flat for a while. Make this a little bit larger, you can see just a couple of steps down, kind of similar to here, which eventually did accelerate to the upside. So we'll see how that plays out. Right now, it does look bullish with that upper ATR being resistance, but we need to get through that second ATR band right now, which is at 467.08. And then zooming in here to the daily chart, that resistance is quite a bit closer. 468.09 is that upper ATR. Momentum, not nearly as interesting, continues to accelerate to the downside, especially over those last two trading days, which were bearish. Talking about that Friday candle, volume weighted MACD is showing some warning signs. 8 EMA would be your support at 458.71. So those shorter time frames are definitely flipping to the bear side. Longer ones are still showing quite a bit of bullishness. Seems to be the trend. Moving over to the Russell on the weekly chart, much different thesis here, down 2.2%, broke my 201 level. You do have some trend support here, so let's zoom out and take a look at that. You see this trend line here, this is a longer term trend line, held support. Usually when we cut through it, it's quite fast. We can see some pretty wide sweeping weeks there, 8% down here on 6 March of last year. If we get a candle like that, that's going to be quite bearish, obviously. You can see 3 stacked candles. Slight retracement, pretty common. Couldn't take out that previous high, and usually that's going to result in some more downside. Critical level for me is this trend line here. That's going to be at 200 basically for next week. If the 200 level gets taken out, we're probably headed down to the 200 SMA at 194. And then if this zone breaks, then who knows where we're going. Potentially back down to these much lower levels. Let's go ahead and extend this trend line out. That would give you some support down around that 189 zone. That could be interesting. Momentum bearish, RSI bearish. The Russell looks quite a bit weaker going into next week. And then jumping down to that daily chart here, you can see the gap and fall that we saw on Friday. The rest of the major markets were still holding up a little bit better on Friday, mostly due to those big tech names, which haven't really sold off at all. Plus you have NVIDIA continuing to rally. So Russell not doing great, especially with interest rates going higher like they did on Friday. Moving over to the Tasty charts here on the weekly, a little bit different story. It still looks the same structurally, obviously. It's the same price action. Looked very weak on that last week. But in terms of momentum, we did see one step to bullish. So we've been in bearish momentum. Saw a slight step here. Price action really hasn't followed the momentum indicator, just like we've been talking about on some of the others. But now we're starting to see a little bit of a swing higher. So you could potentially see a hold in that area around 200, like I said, continues to be interesting. If that zone does hold, we start to push to a higher high. Your upper ATR is up in that 220, 223 zone. That could be interesting. I would still be very hesitant. I still don't like these 3 bearish candles in a row, and now we're starting to see a bit of a retracement with a lower high setup, but it's not impossible. It's something to consider. Then moving over to that daily chart, again, you can see this continuing to fade, momentum bearish, no volume. Took out the ATR, so you have bearish conditions on the daily chart finally. That upper ATR resistance now is going to be 211, so that could be interesting. But lower ATR would be your price target based on this daily chart. That's down around 197, which again makes sense with what we saw on that previous chart, as well as that 144 EMA sitting there at 197.76. Moving over to the Dow, very different thesis, slight bullish trend, 0.25 to the upside. It is right on top of all these EMAs and SMAs, so that is concerning. So we finally have consolidation of the 921 and VWAP. So if this were to break down, there's no dynamic support until we get to that 55 EMA. That is usually not what you want to see. So once this consolidation, sideways chopping market, that kind of opens the door for downside potential. And that support is all the way down at 363.47. And you can also see there's not a ton of volume here. So it would break down pretty quickly to that level. And then if that broke, then you're looking at these highs back here from July down around the 355 area. So pretty interesting there. Zoom out, see if we can get a little bit different volume profile. Not really. So there's still a gap in volume through this zone. So generally that means this is going to fall quickly, get to that 55 EMA, then we'll see what happens. Momentum and RSI both very bearish. And then zooming into that daily chart again, you can see a wick to resistance, VWAP, 21 EMA sitting in that zone, quickly rejected from that level. If 387.77 breaks, we're probably headed back to 382, just like we did here, gapped right through that, fell to the next area, rallied back up, tested resistance, probably going to fall through there. And then similarly to the other chart, dynamic support down at 380. If that breaks down, then you're looking at the 200 SMA down in that 370 area, which does fit with that last thesis as well. Does not look great. And then look at this RSI as well. Big breakdown, retest of the SMA, probably going to head to oversold conditions, and then we'll see what happens from there. Dow not looking so good on the technicals. Moving over to the equal weighted S&Ps here on the weekly chart, we've had 3 bearish weeks in a row, 0.74 to the downside, momentum bearish, RSI bearish. Again, look at that RSI, breakdown, retest, breakdown. You would expect this to make a lower low here, similar to what you saw here, breakdown, retest, breakdown. Certainly could go much, much lower. And then you're starting to see that consolidation, 21 EMA still hanging in there as support at 163.15. Once these consolidate a little bit closer, then you have the 55 sitting all the way down there at 153.55. A little bit of volume in here. You can see this consolidation, and if you zoom out, we've been in this range for a while, so there's a ton of volume at many different levels, but really that first support in terms of volume would be down around 156.57, which is that highly traded zone. So again, could be quite bearish, doesn't look super great, not as bad as the Dow, but not great. And then looking at that daily chart, you can see a high with the low, tried to retrace some of it, starting to reject from there. Support would be 162.57. That looks quite bearish. Momentum bearish, RSI bearish. And you would expect at least a retest of this previous low here at 163.31. Moving over to the ratios, SPY, Russell, and NASDAQ SPY, you can see the Russell did underperform pretty strongly, just like we saw. It was down about 2%, much lower than the other major indices, was not good. Momentum on this has broken out. Next level, 266. Zoom out here, see if we can see the last time that we were in this area. Eventually it does break down, so these are extended levels for sure. Only time that we've been higher than this, you can see we got close in 1990. Let's go full screen on that. You can see we got here in August of 1998, stayed above this level all the way until February of 2000, broke down, got back above it here pretty quickly in March of 2000, and then broke back down in February of 2001. And then since then, the Russell has been doing quite well versus the SPY for many, many years. And now back here, June of 24, we are getting back above that level. It's a historical level for sure, 259, 266, starting to get into those really extended levels. Doesn't mean that this can't go on for a while. It absolutely can, just like we saw. But eventually we will pull back to more normalized levels, and the Russell will start to outperform the SPY over the medium term, over the longer term from these levels. So we'll see how it plays out. Right now, the SPY is definitely on top. And then looking at the NASDAQ SPY, NASDAQ did outperform as well. 355 is a critical level. Haven't been able to get above that. It's very close here. Might be able to do it next week. Otherwise, could see a little bit more SPY outperformance versus the NASDAQ if we reject from that level. Moving over to the SPY divided by the M2 money supply, I just wanted to talk about the correlation that you see here versus that SPY Russell chart that we just talked about. Only time we've been even close to this level, 25.91, is all the way back here in March of 1998. Again, broke down, rallied back through in September of 98, stayed above this level, topping out around 3180 or so, and then eventually broke back below this level here in March of 2001, retested it just for a moment in May of 2001, and then we broke down really dramatically into February of 2003, and now we're getting back into this zone once again. So markets absolutely expensive, even on an M2 basis. We are seeing some concentration. We are seeing the SPY outperform. Again, it can do this for a long time. Like I said, got here in March of 98, really didn't break down here until February of 2001. So could be a little bit of a super cycle. It's not impossible that we could get above here, but understand that's what we're seeing. We're definitely bullish, we're definitely extended, and I would consider this bubble territory, but you can absolutely play the bubble to the upside as long as it lasts. Moving over to stocks that moved this week, we got CrowdStrike and ARM Holdings. Switch these over to the weekly charts. You can see CrowdStrike was up 11.3%, ARM Holdings 13.3%. Massive moves on both of these. ARM Holdings is still a new company. We just got the MACD started here on the weekly chart, and obviously it is stepping towards bullish. Got a previous top at 142.38, could be heading towards this upper trend line around 152, 153, and then CrowdStrike, this is all-time highs here as well at 152.68. Trend resistance would be 376.64. This has been a massive move here for CrowdStrike as well. You can see it bottomed out around $94, $95. It's more than tripled the current levels, and this continues to look very, very bullish. It is worth noting there's a little bit of RSI divergence, just like we've been seeing. Continues to make lower lows and lower highs. Now we're getting a bit of a rejection. You could maybe argue low, higher low. They also had earnings, which is pushing it up quite a bit. It is worth noting 2 weeks ago was 10.75% to the downside, so pretty volatile stock, but it did push up quite a lot last week on massive volume with its earnings. So both of these companies seem to be quite bullish going into next week. Moving over to the Mag 7, it was a massive week, up almost 6%, momentum very bullish. Really, it's been quite straight up. This chart continues to be dictated by NVIDIA, which was very strong on the week. Did have a slight down week here, 0.01. Can't even really count that. It was basically flat, and then we got another up week here. So looks very strong. This is all-time highs, clear breakout, clear price discovery. Pretty hard to come up with some levels. The wick high for the week was 417.71, so maybe that's an area where we could head to. We ended up finishing at 408, so pretty decent. If we could get back to that wick high, that's about $10 higher. Momentum bullish, RSI bullish. You can see we clearly broke out here from the SMA on RSI, so Mag 7 still looks quite bullish. Moving over to Apple and Microsoft, we'll take a look at these two together until Tesla starts to do anything. But right now we have Apple headed higher, strong week, 2.4%. Looks like we're headed to all-time highs based on the weekly chart. That's at 199.54. Momentum on Microsoft doesn't look nearly as good. Still in bearish conditions. We got a step towards bearish 2 weeks ago, gained a little bit of momentum this week. Really, to me, this looks like a trend retest, still in consolidation. Doesn't mean we can't push to that 430 area, see what happens there. But another thing to note here, this is starting to look like consolidation. You have all the EMAs and SMAs within a couple of dollars of each other, the 9, VWAP, and 21. And if that structure breaks, 55 EMA sitting all the way down at 370.90. That would be very bearish. It is also worth noting, you can see this RSI continues to go lower on a weekly basis with a low, lower high. Did catch a slightly higher low. If we get up here, reject and make a lower low, that's going to be very concerning, which does fit with that thesis of consolidation. 413.36 is the critical zone. And then, like I said, Apple still looks pretty good going into next week. Moving over to NVIDIA and Google here. We got Google continuing to sit at its all-time highs. 179.42 is that zone. We're stuck between these trend lines. We did see 2 bearish weeks in a row, got a little bit of a bullish week this week, 1.41. Momentum fading, RSI kind of neutralized there. It is above the SMA and above the 50 line, but it's not really trending higher. So again, still looks good, kind of similar in terms of structure. It's extended, it is bullish, just like we see here on NVIDIA. Hit the trend line that we'd been talking about for a while. Kind of expected that this week. Sure enough, it did. Put a level in at 1256. That was the all-time high there on the wick. Momentum bullish, RSI bullish, so everything still looks good on both of these. I would say NVIDIA looks a little bit better, even though it's more extended. Apple's been consolidating. Google's been consolidating at this level and might be looking for a bit of a breakdown with that fading momentum. Moving over to Meta and Amazon. Meta did well, 5.6%, really strong, pushing above that 489.67 level. Next one for me, 520.31. Seems like it can get there, step towards bullish on momentum. RSI, not great. You can see it's still broken down, could retest this and break down further, but there's a nice gap in there. You could fill the gap, touch the SMA, and then reject from there, which would give this enough room to test that next level, in my opinion. And then looking at Amazon, strong candle here as well, 4.45%. But again, both of these look like we have those SMAs consolidating in the zone, waiting for these to touch here. Then we're going to start to see that break down a little further. 55 EMA, quite a ways down there on both of these. 372.66 on Meta, and then here 151.80 on this next one. Highly traded zone there as well. So could see some short-term bullishness, wait a little bit longer for this to consolidate. And then once it does, we're going to start to see pushes down to that 55 EMA. And that's going to be very bearish for markets. Moving over to staples and discretionaries, both of these are positive. 0.41 and 0.96 on the week. Very different level, very different in their cycle, however. Momentum fading on staples. Can't seem to get up to that next level at 79.90. Right now it is holding support, 77.50. As long as it can hold that, could push to that next level. And then discretionaries, this looks a lot better with a low, higher low setup. Momentum swinging to bullish. Want to see it get above that RSI here. The SMA is hanging in there as resistance. If it can push through there, maybe we can see some more bullishness. But right now, it hasn't done it quite yet. Still want to see a 180.10 break, hold that level, and push to 185.36. But neither of those things have happened, so we're still holding the same thesis as last week. Moving over to transports and technology, we got transports holding support at that 55 EMA. So this is a good example of what I've been talking about. You get big move, consolidation, EMAs and SMAs consolidate, retest of that zone breakdown, hit the 55 EMA as you would expect, get a big push into that zone, 3.42% that we got on the 20 May week, hit the 55, might see a little bit of a move higher here. Got 2 bullish weeks in a row. Seen it before, just like we got here, 29 April and 6 May. But you could see a little bit more follow through here to that 9 EMA, up around 65, 61. Big volume coming through on the week, momentum, it's extended, so this could get a bit of a bounce, but I would expect it to reject at some point. And then we got technology, another strong week, 2.59%. Trend resistance all the way up at 225. Wouldn't shock me if we got there next week. Momentum swinging to bullish, RSI breaking out, and the tech sector looks quite good. Moving over to crude and copper. Both of these had pretty bearish weeks, 1.9% and 2.57%. Crude hit that 73.07 level, so interesting zone there. Found some support there. Momentum and RSI are still bearish, so could absolutely see more continuation lower, just like we did here. Big wick rejection, still had more weeks of bearishness. And you also have a high, lower high setup. If you get a low, lower low setup, that could push you down to 66.50 potentially. And then looking here at copper, 3 massive bearish weeks in a row. It's at the trend line, so it needs to hold the trend line, hold VWAP. Otherwise, you got the 21 EMA sitting down there at 4.2. Momentum swinging to bearish, RSI swinging to bearish. If this zone breaks here, I would expect that to move quite a bit more, get another week of bearishness on the back of those 2 following weeks. And what we're seeing here is a breakdown in demand, economic demand for the economy. You can see crude going lower, copper going lower, which speaks to a weakening economy in my opinion. Moving over to RIOT and Marathon. On the weekly charts, you can see both of these were down 0.21 and 1.28%. Pretty non-volatile weeks for them overall. These are some stocks that can absolutely move. RIOT still holding that 8.78 level. That zone needs to hold. Did catch some volume after testing that area. If that breaks down, there's a lot of downside potential. Last time it broke here in May of 22, it went all the way down to 4.8, so it got cut in half again from that level. And that's after coming from all the way up at 76. Falling to $4. So again, very volatile stock, could absolutely get cut in half from this zone, but if it holds, could rally, and then your resistance would be up around these previous highs at 1870. So again, a lot of volatility, could double from there or get cut in half. And really either way is possible in my opinion. And then looking at Marathon, this has been on a bit of an uptrend on the medium time frames. Let's go ahead and give this some trend lines here. There, looking at this structure, you can see it's been trending higher, still holding a higher low here, but it is starting to break down. So if this is a lower high, that could be a change in structure. Does seem like it could be. We talked about this on the daily chart on Friday. This looked very weak. It's rejecting from this level. Wanted to see it push to this upper trend around $25. Couldn't do it. Faded on momentum. RSI breaking down. Does not look good. And realistically, at this point, I think we might be testing that 55 EMA down around 1590. If this zone holds, then you could look for a bounce from there. Moving over to breadth, 20 and 50-day breadth were both not very good this week. 20-day closed below my level, 3660. With that breakdown, you would expect to push at least to this wick around 2370, if not down to that 16 area. Momentum and RSI are bearish. That's not great. We've been talking about breadth weakening for a while. It's really the top stocks holding up markets right now. And then you can see bearish week here, could not get back above 5280. So 40 level, next one to the downside. Below that, 3222 in my opinion. Moving over to 200-day breadth, you can see we actually got a new low close relative to these other lows, so that is not good at all. The close was 66.79. The previous closes here were around that 67.80 area, so that's not good. Momentum fading, RSI still breaking down. Everything's the same as the others, except for that close on the 200. Not great. 200 SMA sitting down there at 61.20. If this continues to break down and gets below 64.74, that would be very bearish, especially on a closing basis. Once this starts to go, it's usually very quick. You can see it here, starts to break down, and it does not finish all the way until we get down to that 24 area. That was a very big down move from July of last year all the way until October of last year. And we've been here for a while. We got here in December, consolidated in the zone, and it's starting to see some cracks there with that new low close, in my opinion. Moving over to the dollar, strong week here, 0.3. Still holding this trend line. So we've wicked it a couple of times. On a closing basis, we continue to hold it. 104.4 continues to hold. Momentum is not great, but this is starting to curl up in my opinion. Next level, 105.5. If this breaks higher this week, I think that's going to put a nail in the coffin here for markets. Unless the FOMC comes out quite dovish this week, I would expect the dollar to continue higher, and that would make equities go lower in my opinion. And then moving over to yields, you can see the 2-year actually turned a positive week after getting all the way down to 4.7, ended up very close to that 4.9 area. I think that's within the realm of possibility. I think we're probably not going to see more than 1 or 2 cuts. Probably 1 at this point is more realistic for this year. And then the 10-year, wicking this 4.35 level, bouncing quite a bit, right back into the middle of the range. RSI is broken, momentum is not great, but look at this Friday candle. Let's go to that daily chart. Big move higher on that Friday candle. Unemployment data was strong, momentum swinging to bullish, and you would expect this to push back to the 4.5 area in my opinion, which again is going to be bearish for markets. Moving over to bonds, J&K broke down, momentum bearish, RSI bearish. It's right at support, but you would expect this to break. Let's extend this trend line out, see how that plays. That would give you some support around that 93.63 area. We've been here for a long time. I think it's probably going to break here soon. And then looking at TLT, tried to break out again on the weekly chart, could not do it, continuing to hold that trend line as resistance. RSI says it could break higher. This looks okay here, so indicating a little bit of bullishness there on TLT. But again, the concern is the FOMC, the concern is yields going higher. And to me, it just doesn't seem like TLT is going to be able to break out if we continue to get that strong jobs data like we did on Friday. Moving over to volatility, move index on the weekly chart through a big wick higher, still very much downtrending, not doing much of anything there. And then looking at the VIX, you can see continues to break down, bearish candle, did throw some wicks like we saw 2 weeks ago, up to that 14.7 area, but gave it all back here right to these previous lows. Support is 1177, touched that here on the 20 May week. Nothing really doing here on the VIX, not giving us a ton of information. Moving over to my accounts, you can see I did okay. I still lost a little bit of money on this week, and I definitely should have. Part of that is because of work, part of that is because of bad trading, so couldn't pay attention to the markets as much as I wanted, and also made some bad decisions early in the week, which I had to make up pretty much for the rest of the week. In terms of positions, IWM, I have a strangle on here for the Monday session. Hoping to make a little bit of money on that, but it was down a little bit after hours. And like I said, the markets just do not look good, to be honest. I think we're probably going to head lower, just trying to be cautious. And this is a little bit more bullish than I wanted to be. You can see 202 put, which means I can roll down to 201, which is probably not going to be enough. Even with the after hours price action, we were basically already at 201. And then with the Qs, same thesis, down about 50 cents from the close, 60 cents. I have a 262 put, so it's still out of the money there. And then a 262 call there for Monday as well. So still pretty well protected, just barely out of the money, 262 put. And then I have a 268 call as some more protection, but my deltas are just too high. I think we're probably going lower to start off the week. And like I said, I'm positioned a little bit more bullish than I would like to be based on the price action that I'm seeing. Let me know down in the comments section what you think of the U.S. economy and the U.S. consumer. Are they going to continue to hang in there and be quite resilient? Or will we follow the Atlanta Fed's forecast and see a slowing economy and potentially a recession in the relatively near future? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.